It seems you're not the only one taking profits right now. We're seeing this huge rotation, as Sophie mentioned, but at the same time, returns seem to be a bit more broad-based. What do you make of the latest moves?
Yeah, people are focusing on the price of money, so the yield curve, that sort of inflationary expectations are going up, and therefore those momentum stocks, the risk on trade is obviously coming to an end. We've seen the focus for us is on valuations, and stocks that we've really come to almost, find that we want to hold forever have got beyond even our blue sky valuation. So, we have to remain disciplined. We've taken profits in some names that we've held since inception of our fund, like the BYDs, the C Limiteds, etc. We even sold our position in the Hong Kong Stock Exchange. And so we've seen that, tech and internet names, even last night, you'll see the Chinese ADRs, they had a really tough night.
So what sort of stocks are you looking into? Because, of course, we know that you have found positions in small caps, but not all small caps are made equal, right?
That's right. I mean, the true thing for us is the structural growth in China. And whilst we've said that many, many times, we truly believe it's there. You can see what's even in the MPC meeting in terms of 11 million urban job creation, unemployment rate 5.5% in terms of its target, steady CPI at 3%. We believe in the growing middle class. Right now, there's 400 million middle class in China, or even 400 million Chinese millennials, people born after the 1985 and their consumer behaviours. So we believe that structural growth that's going to be in China for the next 10 to 20 years. And there's businesses that we're finding that are those uncovered gems. So there's still a lot of stocks out there which are uncovered, and we're finding true value there. So we've been selling some of our big caps. We're holding a bit of cash at the moment, which we don't like to do, but we are finding opportunities. So this sell-off has been broad-based, but there are some opportunities.
So I understand you can't disclose those positions, but they're both in the small cap space. Is that because you see less of that kind of extreme leadership rotation, if you will, within small caps at the moment?
Yeah, Heidi, great question. I mean, what we're seeing right now is, we're a long only, buy and hold, patient capital, invest for 5 years. We're seeing hedge funds, really turn around and go ultra long, ultra short. Volatility is going up. They're not really playing in the small cap space where obviously the large caps are coming off quite a lot. But small caps, I think, we're buying stocks in the small cap space less than 10 times earnings, and we're seeing their earnings grow at, say, 25 to 30%. So businesses that we think, could be the next mid cap, and in very interesting spaces, which also comes back to that compounding long-term returns. So you've got to be creative. Buying in this dip in terms of large caps, we're not necessarily doing that yet. We're finding value elsewhere.